Raunak Onkar joins us, head of research with PPFAS Mutual Fund. 5% down and everybody is feeling, oh my god.
Yeah, people can worry if they want to.
5% after a 25% appreciation.
Yeah, but if you have a longer term view, all these things wouldn't matter. If the stocks you wanted to buy in your grocery list haven't fallen, you really have to just sit on your cash and probably wait for them to come down even further.
So you think this is a buying opportunity or this is a good correction, but we are not there yet in terms of a good entry point?
I agree with you.
That's short and sweet. Is there more?
Very simple. Are you bullish? Yes.
He's so articulate.
Yeah, I know. Do you think there's more in stock?
I wouldn't really know. It's difficult to predict how much it can fall or go up. I mean, there's a lot of other issues, macro issues weighing on that. The whole idea is if you can identify great businesses, like we were discussing in the morning, and if you can stick with them for a while and you can watch those businesses grow and scale, you're set, I guess.
So your largest holding in the fund is Alphabet. You, of course, then have Indian names like Bajaj Holdings, HDFC Bank. You recently bought into Facebook also. Are you worried that globally also this weakness could creep in because they also are at their all-time highs, much like what we were a week, 10 days back?
It's a good question. So I have a question for you. Do you know what kind of volume growth there are in the digital market space?
No.
Ad growth rate or?
No, volume growth. Clicks, number of clicks growing year on year.
Well, I can tell you how much
Oh
Times
my
of
God.
India is getting.
That must be
It's easy.
lack of
It's easy.
discipline.
It's 50%. So if you're growing your volumes at 50% and the pricing is still based on auctions and everybody is coming online, digital is growing right now, why would you scare yourself saying that okay, minor correction in the offing may not be a huge thing to worry about? I mean, these businesses have a long runway, practically a duopoly or oligopoly in the digital marketing space right now.
But the problem for a Google or now Alphabet is antitrust suits. We've seen the headlines which are coming for Google or Alphabet for Europe are not very kind.
Yeah.
And typically when these antitrust suits or large government organizations or large geographical things they go against you, they can break the company.
Yeah, they can. The interesting thing is a company like Google or Facebook who has the cash.
Google has a virtual monopoly, and I think Europeans are jealous that how can an American company, come and just dominate the search market. Look at what they did to Microsoft. Look at what happened to Netscape. Bell is a classic example that how a monopoly can be broken into baby bells, and then the company just finished.
That business was a capital intensive business, whereas this is not so much. So the whole idea behind Google and Facebook, if they are regulated, what are you going to add? You're going to add one more barrier for somebody else to come in because they have to comply to the same regulations as they are. And if you're having good balance sheet, you can weather it easily over a period of time. That's my view. Maybe there is another view out there.
But in India, what is it that you're fancying? Because now on the index, the representation for financials is only going to go up. Bajaj Finance comes into the index, much priced and fancied. Would that also then culminate into your portfolio adjusting for a higher weightage in financials?
So in financials,
higher than the usual, because either ways it's mostly overweight financials.
Agreed.
Right?
So we are right now in financials in 4 forms. One is the 3 banks that we own: HDFC Bank, ICICI, and Axis Bank. And we have Bajaj Holdings and Maharashtra Scooters, which are basically a proxy holding of Bajaj Group companies, including Bajaj Finance.
That's true.
So they are at a significant discount to the underlying value, and probably if the gap closes in the future, we'll see a better appreciation in Bajaj Holdings, maybe.
I'm curious to have a follow-up question, and I'll not discuss FANG stocks, so let's keep the Googles and then aside. It's a long debate right now. Maharashtra Scooter, it is more like buying a Bajaj mutual fund, right? It's got holdings. Yeah, it's actually like buying a Bajaj mutual fund. So a fund manager is betting on a mutual fund. It's like saying that. Okay. Then Bajaj Holdings, again, it's the wealth or the kind of investments they have. Both these stocks have seen a run-up. Maharashtra Scooter is up 50% from the recent low. Bajaj Holding is also higher. Now are these stocks fairly priced?
So in the past, I would have said probably yes, but now with the new Companies Act, there is a reason why you have to look at these holding companies, because now the related parties cannot vote into significant decisions that the company has to make regarding cash allocation or whatever. So in that case, there might be, so internationally if you see, the difference between the holding company and underlying is not so much. We are seeing a 50-45% discount to the holding underlying. So maybe we are going to see a different phase for the holding companies. Let's figure it out.
Explain this point to us. I'm aware of the procedure and I'm aware of the new finance norm. But just for the benefit of our viewers, you're making a case that holding company discount should go away because of the new accounting norms.
Not accounting norms, the voting policies.
The
that
voting policy.
in terms of corporate governance, now the minority shareholders have more weight in deciding what happens with the company's balance sheet going ahead.
Why would you still have Persistent, and that's a sizable holding of about almost 4% in your mutual fund? I mean, would there be a time when you would go back to the drawing board and wonder whether this is a wise holding? Would you look to sell it at any given point? What still continues to give you conviction about Persistent?
It's a good question. So we keep reassessing every once in a while as to why an idea works or doesn't work. And we see that they don't have the kind of legacy baggage of the managed services businesses that the bigger IT companies have.
But is that enough? Because I mean, IT per se as a sector is not really doing well, and I don't think it is going to do well for the next foreseeable future.
So look at the average ticket size of revenue that they have, which is less than $3 million right now. So if you can get a little bit bump up in the average revenue that you can grow, and the other companies are running at $12 to $15 million average revenue size. So there's a huge gap you need to cover up. And without being in managed services, which is anyway a declining business, you're going in digital space where you have the skills to execute on all the contracts. All you need to do is set up your sales base, which has been the challenge for them in the past couple of years. And they're addressing it. I mean, we have to trust the management to some extent.
And so you do put faith in them. Any of these names, Zydus Wellness, Mahindra Holidays, Balkrishna Industries, or for that matter HPCL, because now the story for OMCs also seems to be completely turning around. Anywhere where you think you need to reduce your holding, or at least that's a thought which crosses your mind?
So HPCL is an arbitrage position.
Okay.
So it's not a core holding anyway.
Okay.
The other stocks that you mentioned, so they have a runway. I mean, it's not like they are bid up like to crazy valuations. Zydus, for example, if you see, they have the highest market share in the sugar-free category. And if you believe the stories that the diabetes numbers are increasing consistently in the country, we'll have to believe that people will not quit the taste of sugar. So we'll hope that the business keeps growing.
So you're bullish on IT, which is, I would reckon, a contra bet because the market is a bit sluggish on IT right now. What's your call on pharma? Would you be bullish? And how much of the stance on both these sectors would be in relation to a structural change in the currency's direction, which is now going lower?
So currency is a huge problem for IT companies. The whole idea was to keep costs low and readjust the forex impact that they are going to have in the future. So that's one way of looking at IT. For pharma, we have a portfolio approach. You buy small stakes in a few companies because you cannot really put a big bet on one company. You never know where the regulations will move. You never know where the product portfolio will move. So we realize that if the company has strong balance sheet, good management and good products in the runway, I think we have to figure it out and readjust the portfolio accordingly.
You're playing across market caps, and that's very unusual. You own what could be called as India world's one of the biggest company, which is Alphabet. You own something like a Maharashtra Scooter. The market cap is not even $1 billion. So for a unit holder, what is the messaging here? Are you a large cap guy? Are you a small cap guy? Are you multi cap guy? I mean, what is your positioning?
The whole message is that we can go anywhere where the opportunity is. We don't have to restrict ourselves to Indian stocks or Indian ideas or small cap or large cap. Wherever we see the opportunity exists, we will probably go there and take advantage
for someone who believes that you should find value, explain to me, on one side you got ICICI Bank, on the other side you got HDFC Bank. You have exposure to Facebook, which frankly is a difficult business for me to understand, but then you've taken a conservative bet by buying something like Mahindra Holiday. So is there a thought on the P multiples or the kind of companies or you choose, or you only believe in buying good businesses?
Good businesses is the first and foremost category. Good management is the most important one. The multiples obviously matter, but P is one way of looking at it. If you look at cash flows and cash on the balance sheet of these companies and what they can do to deploy that cash and the incremental return on capital that they can generate on that business is significantly higher than you can see in many companies in India, because we have a higher cost of capital right now.
No, but you're saying stay away from very expensive stocks. HDFC Bank is expensive from a price to book perspective.
Relatively yes. So if you look at PSU banks, if they are ceding market share to all the private sector banks, the banks who are already at scale can take advantage of that sooner. I mean, there is some reason why banks like RBL and the newer private sector banks are growing so fast. It's because somewhere the market share is being ceded to them.
So that rule has some exceptions.
So that story has been going on for a while, and I hope it keeps playing on.
The There's quite a bit of new paper which has also hit the market of late, and insurance seems to be this big ticket theme. You've already got ICICI Pru, ICICI Lombard listed just yesterday, and slew many others in the pipeline as well. Any newer pockets that you may be looking at, or at least reading up on and researching about?
We keep reading a lot, but we act very few times. So what we own right now, we feel we are comfortable with, and probably if we get more attractive valuations to buy them, we can buy them again.
But heart of your portfolio, which is Alphabet, or for that matter, Bajaj group of companies, the three banks which you own, you think 90-95% of your portfolio is unlikely to change for next 12 months?
Tough to say, but I think I can agree with you. If valuations remain the way they are, we can probably see the same stocks in
The
the
general
portfolio.
view in the market is markets are expensive.
Markets can be, but we don't think businesses are that expensive.
What do you think is at an inflection point? The idea which every fund manager chases is that try and find an inflection point for a company, for a sector, or for the industry. Give me 1, 2, or 3 names where you think there is an inflection in making.
I don't think we have to always look for inflections. Sometimes the trend keeps going and you have to just keep holding on to long-term ideas.
Give me an example.
Banking, for example, private sector banks. So every employee that joins into the private sector nowadays, what accounts do they get opened directly?
What about job creation? Job creation is not happening.
Very good, very good. Yeah, yeah, that's not happening. But some
All the
industries.
consumption theory which you bought by
Yeah.
Zydus Wellness or Mahindra Holiday, or for that matter, some of the consumer names you own. Suddenly, I could make a Excel sheet and prove that if job creation does not happen, these valuations will not sustain.
Yeah, the same Excel sheet can be used to do the other things. So anyway, the whole point is.
The funny thing about market is that every price there's a buyer and a seller. The buyer thinks he's intelligent because he's buying it. The seller thinks he's intelligent because he thinks the stock has peaked out.
I would take reference to the logo of Times Network, the top of the pyramid kind of a thing. So a lot of these businesses cater to the top of the pyramid. So as and when more people come up in the ladder, probably we'll see some of these ideas getting more steam. But I'm not saying it's going to happen immediately or I can predict a timeline for that. It's just a structural thing and you have to keep waiting and watching and then readjust your portfolio accordingly.
You like Indraprastha Gas, as that's core to your portfolio in gas distribution, but not GAIL. You've not added that. Are you completely off the state-owned company?
Those are different kinds of businesses.
I know, but it's still in the gas segment essentially.
Yeah. So IGL is probably a virtual monopoly in the region that they operate in, and every new line has to be put in. They have the first dib, that we can go in and put in the new line. So they're generating cash flows, reasonable management. They're doing a good job at what they're doing.
Okay, so closing comments, at least from my end, and then maybe Asha could have a follow-up question. What excites me about your construct is that there is a very strong exposure to global businesses, about 20%? 27-28%. Will that remain? Will that division between local and global, will that remain like this? Or you could look at reducing your global exposure? Because I think there's a SEBI mandate that beyond a percentage, you cannot buy global stocks.
Agreed.
So the percentage allocation cannot go higher, it will only come lower. But are you committed to keep this fund more like a mix of local and global plays?
That's the whole idea. So by mandate, we cannot go beyond 35% in foreign stocks. So for example, if we see a better opportunity in India, there is no reason why we cannot liquidate something there and buy something here. And plus we have cash, so we don't have to do that.
So when would you look at Tesla and Amazon?
We keep looking at them, mostly to see how they are disrupting other
stops you?
companies that we want to own. So those are really good case studies. I mean, you have to, if you cannot
Buffett
value
says
them.
Amazon is a great business.
I agree with him. I am a huge fan of Amazon.
Tesla
I'm a
is
customer.
perhaps the
Hope trade.
next age of things to
And
come.
it's a hope trade.
It's
or
a hope trade. Would you? I mean, do you
We're
have
not
that?
in that. We're not
No,
in
you're
the hope
not in
trade
that.
business.
But your
What's
opinion.
stopping you?
Like you said, it's a hope trade. So let the numbers come out, let other competitors come in. Everybody is putting up capacity for electrical vehicles. So
Yeah,
you have to
true.
see how the competition plays out. Right now, one player which has the most visibility is out there and everybody believes the story. Let's see how it plays out.
Okay. Great speaking with you, Raunak.
Likewise.
Thanks so
Thanks for
much for
having me.
taking the time out and joining us today in the studios. That's a flavor of what Parag Parikh Mutual Fund is doing in their portfolios.